Good unreasonable time of the morning to everybody. This is Andy Pedraza with Special Effects Academy, and we are gathered here today for the European interest rate fundamental announcement, which is coming out in about 20 minutes. How is everybody today?
I'm very well, thank you.
Oh, hey, Callum, how you doing?
Oh,
Thought I saw Hayden pop in and out. I never saw him pop in again.
Right, it's just me and you by the looks of things at the moment.
Yeah, I'm sure I saw Hayden on the list when I joined, but no Hayden now. Well, it's good to know Hayden exists. Okay. So no point in looking at any chart other than the euro dollar. Well, maybe the euro pound, but let's see. Euro dollar is at its highest that it's been. Well, almost at its highest. It's at the support level. Barely. So that is euro dollar. Let's see euro pound. And euro pound is pretty much in the same middle of the pack where it's been for quite a while. Definitely euro dollar. Okay, euro dollar. Wow, it's a triple, quadruple. Okay, so it's at a nice point there. It has about 150 pips to the top, maybe 170, 160, somewhere around that level. To the next high, and then quite a bit to go to the high, which is at the 124. Not that I expect the Europeans to do anything today or ever. That's my bias against Europe showing there. But we do have about 600 pips to the top. And we're at significant levels of support resistance right now. This thing is likelier to crash than it is to go up, and we have about 300 pips to the bottom. And 15 minutes to go, and I'm in no rush. But for the sake of argument, I think my $118,225. Okay, so if we draw a 50 pip band around current price, that I think is going to be my entries on a long and on a short.
What's your reasoning for the 50 then? Is that?
I wanted to move at least 50 pips before I commit to that. Anything tighter than, even that's a little bit too tight. If I expected this thing to actually move, if I expected the Europeans to actually do something, I'd put it about 100 pips. This is actually very tight.
Gotcha.
But since I don't expect them to do anything, I'm going to give it 50 pips. Now, assuming that they, so that is 118,725. Let's go up. That's not where I want it, but that's going to be a buy stop at the 118,725. Stop loss is going to be 50 pips as well. So stop loss is going to be exactly where it's at right now. No take profit. That is the buy stop. Okay. And the sell stop is going to be at the 117 to 117,725. 117,725. Stop loss is going to be the same as current price. No take profit. So stop. Okay. Looks good. And I'm going to do a very tight trailing stop at 25 pips. Okay, so that is a straddle to buy at 118,725 with a stop loss of 50 pips and a trailing stop of 25 pips. And a sell at 117,725, same 50 pip stop loss, same 25 pip trailing. And we've got 11 minutes to go. And the only thing left to do is to monitor the price. And if it moves too much between now and then, I will adjust the entries. I'm going to be trying to keep that 50 pip band as my straddle. Okay. And again, I don't expect this thing to move drastically unless, again, the Europeans, against all reason, actually change the interest rate, in which case it may either rise rapidly or plummet drastically. But if they don't do anything, we may have a little bit of a swing, just because doing nothing is also something. So it may indeed cause it to weaken, which means it will go up. And if it moves enough, let's say it moves 100 pips, I'll capture about 50 pips of that. and I'll quickly know to get out and grab whatever profit I have. But we'll see what happens. Comments, questions?
No, sounds good to me.
Okay. And let's see what we have as a trend line these days. Okay. Now it has dropped 5 pips, and I may adjust, but right now we've got a band of 55 pips and 45 pips, but it seems to be going back up now. Now, the only reason I don't put a limit is because if it does suddenly shoot up or down by 300 pips, I want to get as much of it as I can. So I don't want to let it take me out too quickly in case we do have one of those rare fundies that is sort of like I'm going to call it a gray swan. Not precisely a black swan, but it's closest cousin.
Black Swan's close cousin, but you make money.
Yes, I should write a book called The Gray Swan.
I'm liking it already.
Yes, it's about time I coined the term. Why let Nassim Nicholas Taleb have all the fun?
Who?
Nassim Nicholas Taleb, author of The Black Swan, one of my favorite authors when it comes to trading and markets and stupidity.
Did he write the book on stupidity as well then?
Well, he's written a 5-book series so far that he calls the Inserto, which is about uncertainty. He started with Fooled by Randomness, and the last one is Skin in the Game. It was Fooled by Randomness, The Black Swan. What are the others? I forget the titles, but they're all fantastic.
What's his name?
Nassim Nicholas Taleb.
Yes.
If you go to our website and scroll to the bottom, you see that I have his books there prominently displayed.
Oh, I shall go.
In case people want to read something intelligent and they've already read my book, then, they can get Nassim Nicholas Taleb's book. So the books are Fooled by Randomness, followed by The Black Swan, followed by Anti-Fragile, Skin in the Game. And there's another one that's really a book of aphorisms that's called The Bed of Procrustes.
Mm-hmm.
So those are the 5 books. You get a couple of other books that I haven't read. Good to know. They're not part of that series, but they are there.
I should have to have a little look at it. It's quite interesting.
Yeah, especially Fooled by Randomness is I think a really good entry to his work.
Mm.
And the premise is that, as I always like to say, the market, does whatever it wants to do, and then people try to fit an explanation around it. Oh yes, the euro went up because this, that, and the other, when it moved up 20 pips. No, that wasn't why it moved up. It's because the market goes up and down like that. And one of his more famous examples is Bloomberg explaining that I think it was the dollar, let's say it was the dollar, that the dollar went up by 0.2% because the Fed said X. And then the next day, the dollar went down by the same 0.2%. And Bloomberg also explained it that was because the Fed said the very same thing that had made it go up the other day. So that's just retrofitting. People want to explain things.
To be fair, it's got to be quite difficult to come up with bullshit every day to fill the sort of like spot they get given. Can you explain why the market moved 0.5% today or 0.25%?
Well, I've always, yeah. Go on.
No, I was going to say, yeah, of course I can. And then they come up with whatever's been in the news that day. Or
exactly. Exactly. But that is being fooled by randomness, for one. And also, and this is a huge pet peeve of mine, people somehow are reluctant to say, I don't know. Andy, why did the euro dollar go up? I don't know. I really don't.
Because they
why do I have to make something up?
Because if you sit on there on Bloomberg and say, I don't know, they're not going to call you back tomorrow, are they?
Well, actually, they should, because at least I'm being honest. As opposed to me making myself and the network look stupid by spouting nonsense, which other people can clearly see as nonsense, even if 99% of the listeners can't. Alexa, play Bloomberg TV on TuneIn Radio. We are 2 minutes away. We are 2 minutes away from the fundamental announcement. And of course, Bloomberg is on commercials for some insane reason, probably while they're making up the reason why the euro is going to do this or that. They're probably throwing the dice at Bloomberg right now.
You're really like an Alexa.
But anyway, that book opened my eyes to exactly what you say, the bullshit.
I mean, to me, a lot of the market movements has got to be to do with who's selling what, when, and where. If Nissan are coming out with a brand new motor and they want to sell it in America, then they're going to need the yen to be weak against the dollar, aren't they?
Well, yes and no. The timing is okay. Here we go.
We're just seconds away from the latest ECB decision. Let's take a look at where markets are headed here. So euro dollar is up by about 0.2% as you have pretty much flat over in the equity market here in the U.S. and a little bit softer over in Europe. Other asset classes, though, you're going to want to watch the bond market. You're going to want to watch the currency market. Euro dollar ticking up 0.2%. The euro kind of winning out aside from that hawkish ECB yesterday. Will Mario Draghi be able to walk?
So we've got the euro's gone up about 15 pips since we put the straddle in, which means it hasn't done much in the grand scheme of things, but it is weakening against the dollar.
the ECB decision. No expectation for a rate hike, but it's the color we need to wind up paying attention to as we continue to wait for that number, that deposit facility rate down by 40 basis points. Also taking a look, we'll be paying attention to any changes in their bond buying program.
And it's quickly going back to the same level. We're now at 10 pips away from where we were. Okay, it's completely gone back to.
They do change their forward guidance on interest rates. They will buy bonds until December. They will buy 30 billion worth of bonds until the end of September. So we did get that announcement where they.
So now it's heading in the opposite direction. See why my band was 50 pips, Callum?
Mm-hmm.
Because I don't want to be in this bullshit.
It still amazes me sometimes how things respect trend lines that you put in ages ago that you really forgotten where they came from. Because on my screen,
Yes.
that went straight up, touched the trend line that's been there for donkeys, and then come back down again.
Yes, and that is, well, the trend lines represent psychological points in the market. So it is amazing how they get respected, and then it's also, well, that's what they're there for.
Yeah, but I draw in some really random trend lines, and it still amazes me that they'll get hit.
You know what happens there? You're being fooled by randomness.
Yeah, probably.
Most of what the ECB is saying here will be expected, with the exception of that fascinating interest rate.
Okay, definitely it looks like the direction is strength for the dollar. Strength for the dollar. As nobody's too convinced on what the euro is doing or the European Central Bank. We are very close to having our entry on the short being hit, and now it's moving away again. And like I said, if it doesn't have the strength to do 50 pips, I don't want to be in this thing. But it is now about 20 pips away, 15 pips away, 10 pips, 15.
This decision of timing, the decision to end QE, the decision to announce that to the market. And then there will be talk about rates. I think because they say they're going to leave rates unchanged until the summer of 2019, that's going to become a real focus. I've already heard reporters this morning talking a lot about the forward guidance for actual rate moves, and the fact that the ECB is bringing it up, I think, leads them to a load of questions in the conference.
Okay, Bloomberg's Matt Miller, thank you very much. I just want to point out market reaction here. So euro dollar spiking to that 1 month high.
Okay, we're about to be taken in, and I'm not really seeing it.
Only 7 basis points, pretty much flat when it comes to bonds as well, and flat when it comes to Portugal in terms of their debt. So it feels,
but it does look like we're going to get taken in, but I don't know if this is going to have strength to go much deeper.
So I think it's largely as expected. The forward guidance on interest rates is in line with what the market was thinking. We were expecting.
And of course, I switched to a 15-minute view just to give us a little bit more excitement, because had I stayed in the hourly view.
Well, I'll tell you, my spread's definitely a bit wafty then, because I'm already in.
You're already in?
Yeah.
Your spread is definitely a bit wacky.
Oh, it is, because the candle's not even near my entry. Oh, it's just touched my entry now.
It is now touching mine. Boom, I'm in.
So I think it's essentially what they should have done some time ago, but it's essentially what the market was expecting them to do. But it's just sort of locking them in a bit. But today we're getting the announcement that
I am in, and I'm canceling the other side of that order. I don't trust this thing to actually move much deeper.
No, funny feeling it might just stay in that channel it's made for itself.
It might indeed retrace back to where it was. In which case, there go 50 pips, but I'll probably be moving that stop down.
it's there in part because of what he did.
I think it's certainly true to say that yes, the economy responded.
That stop is going to be moved down to break even as soon as I possibly can arrange it. I need to give it a chance to move.
But that then created, perhaps a more severe downturn as well.
This does give us a second major central bank, though, that is stopping QE, and that's got to take liquidity out of the global market. What is the likely effect of that?
Third major central bank, the Bank of England has already stopped.
I beg your pardon. I beg your pardon. The James Bond. Another major central bank.
Well, now this is, I think, one of the critical issues. They're not necessarily taking money out of the market, because what are central banks doing? Central banks are reacting to falling demand for cash. That's what's going on. Here we had last month Apple saying we've got $100 billion of cash on our balance sheet. We don't want it. Well, that's a reduction in demand for cash. If you've got falling demand for cash and you leave the money supply untamed, you've got a problem. What they're doing is simply reducing supply as demand falls.
At least it's holding.
Take money away from the markets.
Hasn't started to retrace significantly yet.
And to your point, the ECB said they're going to reinvest their debt for an extended period. So in terms of taking liquidity out, is a very different conversation.
But I am moving that stop loss down to 15 pips. So I'm going to move it 35 pips down. Stop loss. I'm actually going to move it. I'm going to take the 22.5 pips off.
It's hard to see on this particular chart, but there was a spike up in the euro at a 1-month high when you got the headline that they were going to end QE in December and gradually fade.
There we go. Now I'm risking 20-something pips.
December, then the euro took a leg lower as the headline crossed. The rates will be unchanged until the end of summer 2019. A firm commitment in some ways on rates that I don't think the markets were necessarily expecting. And you did have a sell-off in the bond market. It's continuing, but much less, pretty much gone when it comes to David?
And coming up next, what some forecasters are saying about China's trade.
What was that?
Huh?
What was that?
Me moving me stop.
Oh, okay.
Not gunfire or anything like that.
You always wonder. Okay, so there it continues to drop, which is what we wanted to do, of course. So it is definitely holding. It is now 7 to 8 pips below. But still not enough to naturally move my stop. As soon as it captures 25 pips, the stop will move to break even automatically. 12. 13.
Come on!
Yes, come on, drop you sucker.
No, go back to bed.
Okay, it looks like it has legs. Alrighty, that stop is going to move. That stop moved. The stop is now at break even. I cannot lose.
Mine's not. I've got to change broker. This one's getting right on my nerves.
Ryan, I don't know how else to say this, so I'll just say it. What is it? People, are you breaking up with me on a roller coaster? Well, we do have a lot of fun. Maybe we should.
It's a funny sound, Bloomberg.
5 minutes away from a new candle, and that new candle on the 15-minute will tell me all I need to know.
I just need a little me time.
All right, there it goes. Now I not only cannot lose, now I cannot help but win, because now my stop loss is below my entry.
Me too. Job done.
And what it suggests is actually China is out running a big trade surplus on property. What this says is the top on the yellow.
So, do you think the 25 trailing stop will be enough to let that have a little play?
So as in fact,
I think so.
substantial surplus, although it's coming down in goods,
I think so. At the rate it's moving, yes. If it does retrace 25 pips, chances are good that it's just heading back to where it was before.
And what it is they're exporting less stuff, and they're having more of us come over there and give them service.
But I wonder if they're going to care about that. Isn't that the point?
If it does start dropping faster, I'll give it more room, but I don't see it dropping. In fact, I'm half tempted to take my profits and go in the opposite direction now. But I'm going to wait till the close of the candle.
Area might that hurt the most? Are you still going to produce less, or are you going to produce more? And what happens to the services gap?
And I suspect that Xi Jinping would say, I'm looking for.
But in fact, I'm not going to wait all that long. New order. Pending order. Buy stop. 25, 20. I'm going to give it till, what's my 117.70, 117, 71 is my entry. Stop loss, 117. Give it 25 pips. So 96. I'm sorry. I said 25 would be 51, 46. 46. Place. And 118.50. I'm going to put 118.50 as the take profit.
Check out the unrivaled iPhone 10. I can unlock it with my face. They call it Face ID.
Trailing stop the same 25. And I will be adjusting that one because I do expect this thing to return to exactly where it was later today. So might as well pick up those 30, 40 pips. Actually, closer to 80 pips.
Congress finalizing the Louisiana purchase.
Yeah, so you're basically going, if it takes your stop out, you're jumping back in and riding it back up to the top.
Yes. That's exactly what I'm doing. Playing the retrace.
I just saved hundreds of dollars by switching to Geico. I feel like a whole new
Pound Canadian is coming back to us. Hallelujah. Pound JPY is also coming back to us. And Kiwi dollar is doing not much. Oh, look at that. Our euro is picking up speed. There we go. And we have a new candle now, and the new candle is still bearish. Yay. Look at that.
Take out that next low. Go on. Oh, now you're talking.
And we have 50 pips. We have 50 pips.
Right. I have that at the bottom of my channel. So what are you going to do now?
Well, I see the channel right there. Well, I see support right underneath it. Support just came into view. Oh, look at that go back. But the fact that we have 50 pips means that we've already got 25 in our pocket because my trailing stop is at 25. So worst case scenario, we have made 25 pips.
Cool bananas.
And that is how it's done. Now, do we have anybody other than Callum? No, it's just us. I wonder what happened to Hayden. He was definitely here. And then suddenly he wasn't. It's like he said, oh, it's these two guys again.
I wonder what's happened to Jeffrey. It's unlike him not to say anything, isn't it?
It is, it is. Okay, it's going back to 50 pips, so it is heading back towards that support. And I want my entry on the retracement to be very close to my stop loss, so I'm going to change that. My entry is now going to be the 117.50. So I'm dropping that entry price, and my stop loss is going to be the 117.20. I'm going to give it 30 pips, and same take profit, modify. So that is my pending order. My retracement pending order has been modified.
Okay.
President Putin meeting with Crown Prince Mohammed bin Salman, which you are paying attention to.
Yeah, because they're meeting with their energy ministers as well. There's already been.
Because, ladies and gentlemen, I'm going to make these pips twice just because I can. I'm going to make them going down. I'm going to make them going up.
Like a whole ceremony of conversation. They actually watch the game.
What language do they speak? The translators, I don't know. So do you think English?
We would think English because we're English.
Putin typically refuses to speak English. He can do it, but he refuses to.
I'm getting this up.
Okay, let's get an update now.
And I'm probably going to make more pips going up than I made going down.
I think you're right. You're right. Definitely.
And I think I'm not going to be as aggressive with my take profit because I no longer need to. My take profit is going to be that support resistance level. So my take profit on that retracement play is going to be at the 118.22. Which is still going to give me 70 pips of profit if and when. And if it drops another 25 pips, I'll move it again. Well, we have the pound JPY has come back to life, and the pound CAD is now carrying profit. The Kiwi dollar is the only one carrying deficit.
Thank you so much, Emma.
Let's see what the euro pound is doing. Okay, so the euro pound finally dropped back into the channel, but it hasn't really done much in the grand scheme of things. Well, neither has the euro dollar. I mean, we're looking at a 15-minute, but still. It has dropped back into the channel, but it has definitely not crossed any of the recent lows. So it still has a ways to go on the euro pound before it's significant. Back to the euro dollar. Oh, look at that. Look at that euro dollar go.
I think what's happening is very interesting to see that growth is turning over a bit in Europe, and the numbers have gotten softer at the same time that we've got.
Sometimes it is this easy.
As far as
These are the days that make Forex trading look easy.
I think you're going to see some widening as far as credit spreads across the theater.
And then you get cocky.
They pull back a bit.
That's what I'm thinking. I mean, is there a reason for you to go with a 1.175 re-entry back up? Is it?
Yes, because I figure that if it moves back up by 25 pips, it's retracing.
Yeah. So, gotcha.
So if you see what I'm doing, if you see my stop loss, I'm putting my buy right above it.
Yeah.
That's all I'm doing. So if that stop loss moves significantly, I will move that entry as well. Because if it goes back up by 25 pips, then to me, that means it's retracing. I may be wrong, but that's what it means to me.
Gotcha.
At this point where you'd see them maybe reverse some of the decisions that they made. But I think
Go on, get below there.
Well, it's already back to our 50-something pips.
They have really manipulated the rate market in Europe and the currency market by being such a big.
And the pound is also suffering as a result. That's why our 2 pound trades are now positive. One delightfully so. The other one at break even.
Well, I think it's the picture's complicated, right? We have sort of a pivot going on.
It has yet to pierce the support on the euro dollar. We can see that line of support right at the bottom of the screen.
Yeah. Just keeps bouncing there and coming back up, doesn't it?
Yeah, but that's normal because, you know, it's people getting in and out.
Mm.
But if enough people start getting in as opposed to getting out, then it will retrace those 25 pips, and I will decide that that means it's going in the opposite direction and the move has run its course. But as it is, we have now captured 27.5 pips.
I think we like
No matter what happens.
They are in the bank.
So it was a tough call. I could see you sweating there. So if that's the call for the euro trade, let's go into the U.S. and what we heard yesterday. Particularly want to point out what Jay Powell, Fed Chair, said about the yield curve.
So at this point, all I can say is that now we wait 7 minutes for the next candle.
Yeah.
Makes all the sense in the world, but you can't escape just how flat we're getting market. You take a look at the Bloomberg terminal, 210s, 5.
When do you put the newsletter out? Is it tomorrow or Saturday that goes out?
Usually Sunday.
Sunday. That's all right.
Yeah.
You're in plenty of time.
Well, we're in the camp of
Because I'm going to give you an article to put in. I'm getting that discipline one done and dusted.
Perfect.
With the
Anytime
download.
before Sunday is fine.
All right, that's cool. With the downloads, are we going to do them off of the website, off of the article itself, or how do you?
The downloads, I usually put them in Dropbox and just add the link. Add the link. Either add the link to the newsletter, or more likely, I am sending them to an article on the webpage, and that will have the download link. But if we're doing one of your articles, which is only on the newsletter, then yes, I would put the link directly there.
Yeah, this isn't for the blog. It's only for the articles.
That's fine. At some point, though, I'll repurpose it and put it on the blog. But that'll be much later. So what I'm seeing is that level of support is holding. It just doesn't want to pierce the support at the 117.15.5 right at the bottom of my screen. It gets close and then retreats. It gets close, then retreats. So unless it pierces that awful quick, this move is done.
Short-term rates, that's creating a lot of flatness in the short run. but I think we're going to continue to see rates rise at the back end and probably a bit of a steepening from there.
Mark, give us a read more generally of the credit market, and particularly focus on the spread between high yield and IG. What are you seeing, and why are you seeing it?
Yeah, it's going to be back out soon.
Yes, it looks like we'll be taking out a profit soon. Well, it's only halfway there. It's too early to tell. This could be just one of normal waves as it continues down. I mean, we saw that happen before when we were still on that first candle. We were negative at one point.
Yeah, that's true.
But it has gone back about 13 pips from the low. Which is exactly halfway to the stop, the adjusted stop. Yeah, we're 15 pips away from being taken out.
How much duration? High yield tends to be shorter duration, investment grade longer duration. Could it be that people are getting a little bit nervous in the out years since they'd rather be in short duration?
Oh, that's absolutely going on, David, and that because rates are
What?
Nobody's very concerned about. We're seeing a lot of events.
We're going to get shower and go to bed.
I think it's even more than that, which is
It's going down again. If it pierces that level of support, then there it goes. Where I'm going to make a new low.
Come on.
Look at that thing bounce. You can see the fight playing out right now. This is where the fight is happening. Now, more conservative traders would have taken those 50 pips already. But me, I like living wild.
It's the only way you're gonna get the big wins, isn't it? If you got to stay in and be prepared to lose a bit smaller every now and again, but them big ones when they come, it's like thank you very much.
Exactly. Which is why you'll see my account often taking a hit, because I do play it a little bit more dangerously than maybe people should. But that's me.
Thing is, if you've got a feel for it, then if you're sitting there and you're in it and you're feeling it, then you know your risk management, you know what you're doing. You take as much as you can, can't you?
Yes, especially when you're at the point as we are right now when we really can't lose. We've already locked in half the move. Now, I'm not that much of a risk taker either. I'm somewhere in the middle because I had my gut feeling that it would drop, that the dollar would get stronger. But I waited. Because then if you're wrong, you're really wrong.
Well, I must admit, I didn't put the pending order in for the buy. Just with everything I'm seeing, I just didn't see it, to be honest. I mean, if it did, then it'd just be I wouldn't go in there. But,
okay, new candle. Yeah, I hear you. I had a well, my bias was that it would drop, but again, I try not to let my bias get in the way of me making money.
No, that's true.
If it had indeed gone up, I would have wanted to make money going up and not say, oh, well, I didn't think that would happen.
Wise words, my friend.
Let me tell you, many times my bias is wrong, so I've learned to ignore it.
Yeah, I should do more. Well, looking at this, I don't think this is going to go very far for another 45 minutes. Till it finishes painting my hourly candle, because it looks like a perfect hourly candle at the minute.
Well, it could be. It could be. But on the fundamental, these 50-minute candles are very telling. They do nicely segment the movement.
Mm-hmm.
You can see that first candle was the movement. Then we have a continuation on the second candle. Now we're almost making, well, if it stays where it is, it's going to be an indecision candle.
KPMG Global Sector Head of Energy and Natural Resources, and Marco Cotta of Highland Capital still with us. David informs me it's goals, not points. So we have to be careful when we make our references. Okay, so
too early to tell because this candle started a minute, 2 minutes ago, but so far it's basically doing a star.
But I think, David, you're right. They're definitely going to raise production. The question is by how much. My guess is it's about $1 million barrels per day that they will increase, because they'll try to offset some of the declines from Venezuela. But they're at a crucial tipping point because they're at a point where demand destruction.
Okay, now we're at our lowest we've been. At our lowest, I mean in profit. At our lowest profit we've been in a while, as 15-minute candles go. We are 10 pips away from being taken out. My screen has started blinking red.
When the first deal to cut wound up taking effect, and it's Russia that wants to increase production supposedly in the next 3 months. They're pushing more for the 1 million barrels of oil a day. Saudis that have a higher fiscal need are pushing more for like 300,000. How do you see that dynamic playing out, especially new countries like Iran saying?
And now my entry is being pre-triggered. I got my 10 pip warning.
And I would anticipate that we'll continue to see that. I think the Saudis will play a stronger role in trying to drive reduction, or trying to drive a balance increase. And the other players, I believe, will end up coming along. Everyone wants things to stay in the $70 range, 70 to 75. That feels comfortable. And I think that's what you'll end up seeing in terms of the meeting next week as well. Well, interesting you say that, because just a few weeks ago we had Mr. Putin coming out, and he said that we're not interested in an endless rise in the price of energy and oil. I would say we're perfectly happy with $60 a barrel.
7 pips.
Certain problems, which also isn't good for producers. He needs a deal now because they got to start pumping now before it gets cold. Yes, exactly. I mean, it's not
Alexa,
get turned on.
Off.
Was she annoying you, was she?
No, I think she was scaring the market. Now you see, now it's going back down. Okay, it's now retreated back to okay and back up again. But we had a 10 pip gap again for a brief instant. There we go again. So now we're at a safe 10 pips from the stop. And back to 10 pips. Nine, 8, 7, 6, 5, 4. Ground control to Major Tom. Yeah, I'm going to say this move is done.
Yeah. Yeah, on mine, it's just sitting at the bottom of the channel, and I think it's just going to go straight up and bounce up at the top of the channel, which is pretty much where you've got your target.
Yes, indeedy. Commencing countdown, engines on. Six pips. And triggering the buy order and untriggered. And triggered and untriggered. Right at that cusp. And the Kiwi dollar is also trying to trigger a stop loss, off by 10 pips. The pound trades are coming back. Again, the very epitome of a flat week, but we're hanging in there. If we get those 70 pips on the retrace, that'll pretty much fix the week.
That's me out.
I'm 2 pips away. You definitely have some weird spreads there.
They definitely move them. Really move them.
How many pips did you take?
That's a very good question. Where are you? USD. $30 pips.
Not bad. Not bad for morning's work or an evening's work.
Yeah, 30.2 pips. That'll do me nicely. Thank you very much.
Yep. I'll be taking out with 27 pips, I think. Assuming I get taken out because it's dropping again.
Yeah, see, that wouldn't surprise me in the least. Because I think this might have been what happened with, you know, when we was doing the copy trader and the Euro shift got taken out when you were still in it. I think that's what it is. It's the spread that's being naughty to me.
Yeah, that could very well be. I forget if there's an option so you can widen it by a little bit.
No, I think probably the option is to get a better broker.
Yes, that is another option, correct.
Have you played about any more with that copier and the scaling?
Yes, I have, and I think I understand it. But again, I need to connect the real account, which I'm setting it up right now. That's going to be a $5,000 real account, and that's where I'm going to try out the scaling live, because I'm going to make it match percent based on risk. Then after a week, I'll move it to percent based on size, and that'll give me a good idea of what it actually does. But I think I understand it.
Yeah, I mean, from the way I I'm getting it is it's definitely based on percentage. It works out what percentage you're doing of your account size, and then it's trying to match it in the other one.
Yes, that is correct. But there's another setting where it can scale the size based on percentage of risk, not percentage of margin.
That's cool.
So if I'm risking 2% of my account, it scales you in so that you're risking 2% of your account as well, based on the stop.
Yeah. Yeah.
And that to me is a far more interesting option.
Yeah. It just means that you're going to have to work out when you're setting a trade, rather than just doing a lot size, you're going to have to work it out to a percentage.
Yes, but then I don't have to work anything out. The system will do it for me. Holy crap. Wilkes-Barre, that's a city very near me, got hit by a tornado last night. We had a really nice storm, but by tornado, oh my God, look at those pictures. I mean, it's like destruction.
Do you guys get a lot of them where you are then?
We do tend to get a lot of tornadoes in tornado season. They're very brief things. They touch down, they destroy, they move on, or dissipate.
How does that affect your house insurance then? I mean, did you have to pay astronomical prices?
Well,
or?
it affects it in that I must have it, otherwise, I'm very exposed. No, the prices aren't really. I mean, it's not a common thing. I mean, in the grand scale of things, a few houses get wrecked every year, and there's hundreds of thousands of houses. So.
Yeah. It's just I noticed over in England, the way they get around it there is if you say you live in an area that floods, they just won't insure you against flood.
Well, that's what they're doing here. So if you're dumb enough to rebuild after you've been flooded out, the insurance company will tell you, well, here's your money because we did have you insured. Stupid us, but that's it. Yeah, we're not insuring you again. So if you want to rebuild right there in the same spot, that's on you. Yeah. But okay, and this thing is going down again, so I'm sorry you got taken out. That's just the way the cookie crumbles. Yeah. Now we'll go on for a 300 pip win, but unfortunately you were already out.
Oh, thanks for that. There's no need to play like that, is it?
You're very welcome. You're very welcome. But tornadoes are a different thing, because the fact that your house got demolished by a tornado today means nothing. It's not like you're living too close to the river, so every time it floods, you're going to get flooded.
No.
The likelihood of you being hit by a tornado twice is very small, almost to the point of nil.
So you should actually get a reduction in your insurance because
exactly.
I like the way they think.
Exactly. You should, but you don't.
Well, no, because that insurance company's going to be thinking, dang, we got to get our money back out of there.
Yeah. But the government stepped in to offer flood insurance where the insurance company said, no, we won't do it anymore. So FEMA offered some sort of insurance for idiots that wanted to rebuild right in the flood zone. Because, our government is made up of idiots.
It's because people generally are idiots. When you hear these people, oh, but I was born here, this is where everything is for me, and I want to stay here. And so there's no work, it floods out, and every other year you lose everything you own, but you think it's your home and everything evolves in it. Makes me think some people are a little bit silly. That's going to go and break that low, isn't it? Just to annoy me.
Exactly. Just to mess with you. It's going to take out the low and move another 200 pips. By that point, I will be in for about 175 pips of profit. I'll say I'm brilliant. And then we've got the Japanese fundy tonight where I'll do it all over again, and the same thing will happen to you.
I'm going to give the
It
trading.
took out the low.
I just seen it. Yeah.
It's lovely. Everything goes so well when you're not in the trade, Callum. It's just amazing.
Do you know what? I actually set my trading stop to 30 first, and then I thought, no, you're right. I'll change it to 25. And I just completely
Well,
forgot
so
that.
far I am right. I mean, 25 was the distance. The problem is you had a sucky broker.
Yeah. Yeah, I should have to 30.
But we've already had this conversation. You should have set it to 30. You should have given it the extra 5 pips based on what we know about your broker.
Yeah. This is very true. And on that note, I want to go and get a shower.
You're gonna go out. You have no skin in the game, so you don't care anymore. I see. I see how that is. Alrighty. Well, I would leave. Are you leaving the pending buy order?
I never put one in, so.
Well, you probably should.
Do you reckon? Put the pending buy in? Do you think it's?
I mean, if it goes back to where I have it right now, then definitely we've got a retrace in our hands. Yeah. I think I put the distances precisely where they needed to be today. So definitely 25 pips seems to be a decent distance, or 30 in your case. I came within 2 pips of being taken out.
Yeah, I mean, the candle looked about 2-3 pips away. They do that spike with the spread, took it and said, thank you very much.
The other thing I had promised myself, and I forgot I had promised myself, that is that if I had the 50 pips again, I would take them. I didn't take them, so I'm not going to force to write it out again. If it goes back down to the bottom, I'm out.
It's definitely not in that direction now, is it? It's run out of steam. It's sitting on that.
It's going sideways.
Right, yeah, definitely. So tomorrow, are you still doing the usual time, or are you just going straight to the fundy?
I'm doing the you know what? Yeah, I'm going to cancel that one.
Because if you're getting in a half hour early anyway, that'll give you time to go over everything else. There's no point in doing it twice.
Yeah. I'll cancel the 8 p.m. And if this thing drops again to 50 pips, I'm gonna hit the exit button. Oh, there we go. It heard me. Exit. Goodbye. There we go. I'm gone. I'm gone with close to 50 pips.
Nicely done, sir.
And now I'll leave that pending order there and get some sleep because I didn't have a whole lot of that. So I'll leave that pending order there to take me back in on a right to the top. And I'm going to leave that pending order where it is. Leave that pending order where it is. Going to leave the stop loss. Stop loss is too tight. I need that stop loss below the low. So that stop loss is going to move to the 10. Good. That puts it below the support. And I have the trailing, I have the this, I have the that. I am looking good. Alrighty, on that note, this is going to be the end of the fundamental. It moved, it stopped moving. It's probably going to be heading back up in the next few hours. I will let it be. I'll keep it on autopilot and write it back up. So that's going to be it for me. Thank you very much. Thanks for playing. There will be no 8 p.m. session today. There will be a noon session, however, in a few hours, just so we can review what this thing is doing. And I will send emails out accordingly, letting everybody know. Thank you for playing. Comments or questions?
No, I'm fine.
Okay, then we really do thank you for being here with us, and we'll talk to you next time. Take care.